Every day on the internet, you hear about the grass to grey story of people forex trading has changed their life in the sense that they've been able to buy themselves houses, have a lot of money, go to expensive vacation, buy cars, support their family, having that financial freedom and also time freedom whereby they can choose to make money whenever they want. And you'll be asking yourself how you could start forex trading in 2025. So in this video, I'm going to be showing you a step-by-step approach you need for you to get started right in 2025 to become a profitable forex trader. So whatever I'm going to be showing you in this video is all that you need. You don't need anything else. So you stick to the end of this video and make sure you don't miss any part of this video, because whatever I'm going to show you today is what is going to get you started right in 2025. But before we proceed, my name is Vetus and I am a forex trader. I trade synthetic indices, and at the end of this video I have one important message to give to you. So let's proceed to the chart. Let me show you everything step by step and make sure you watch this video to the. So what we'll learn is, first of all, number one is what is forex, and secondly it how forex work and basic analysis tool that you need. I'm also going to be showing you some strategy, basic strategies and risk management approach you need to learn, and how you can get started right in 2025. Okay, so these are the things I'm going to be showing you in this forex beginners lessons. Okay, so you are going to pay close attention to everything I'm going to be showing you today. You don't need much more than this. These are the things that's going to set you up right in 2025. So pay close attention and let me show you more about all of this. So first of all, you might be asking that, okay, what is forex? You'll be seeing a lot of people making money from the forex market and you're wondering what is forex. Now forex simply means the foreign exchange, which is the global market for trading currency. Like we have the dollar, we have the euros, we have the pounds, we have different kind of currency for every continent. And also the goals of forex is you buy low and you sell high, vice versa. So at the end of it, you are making profit, and the market is open 247. Sorry, it's open from Monday to Friday, which is 245. Okay, Monday to Friday every week. So weekends are the time that the bank are already closed because the foreign exchange deal majorly with the bank. Okay, so and it runs in 7 trillion daily volume, which simply means 7 trillion is the amount of money that is being transacted in the forex market every single day for the 5 days, which is Monday to Friday. All right, now the big question that a lot of people ask is, who trade forex? Who are the people that trade forex? How is money being made in forex? Okay, so the number one people that trade forex is the central bank, which is the major bank in every country, and we have the commercial bank, which is the let's say after the central bank we have the commercial bank, like of the local banks you have, like we have the GT Bank, we have the First Bank, we have UBA Bank, and the rest of the bank in Nigeria and several other countries. And we also have the hedge funds. The hedge funds are investment organization, okay, that trade the forex market in billions and millions of dollars. And we have the retail traders, which is simply me and you, who also trade forex. All right, now there are currency pairs that people trade, because like I said earlier, foreign exchange, and because it deals with the bank, okay, and it's money that is being transacted, and money has to do in currency. So we have the major pair, like we have the Euro USD, we have the GBP USD, we have there's even Naira to USD and Naira to GBP and all of that. Okay, so those currencies are trading against each other. Okay, if one is weak, the other one will have strength over it, and you trade in that direction, you are going to be making money. All right, so when you see GBP USD, simply mean Great British Pounds versus United States dollar. Okay, once you are trading, is United States dollar gaining strength over the GBP USD? Okay, if you know that it's gaining strength over the GBP USD, you are buying at that moment and you are making profit. Okay, so like I said, you say you buy low, you say high. At the end of it, the goal is to make profit from the market. And what moves the market? You might be asking, okay, you are seeing people making this money, where is this money coming from and what is moving the market? Okay, the number one is NFP. NFP has to do with the rate of job employment in the US, okay, and that has what they call economic data. So that data affects the economic of a country, and like I said, foreign exchange. So whatever that is affecting the economic of a country is going to have direct effect on the foreign exchange. Okay, so if the economic of a country is getting weaker, okay, other currency is going to have strength over it. And also we have the CPI. It has to do with consumer price index, which has to do with the rate of livelihood. If things are increasing, interest rates, like price of goods, price of if life is becoming, let's say things are adding prices in the country. Okay, so this has to do with CPI. So if the economic of every country is experiencing some economic meltdown, okay, this has to have effects directly on the foreign exchange market, and this is what people trade. That is why you hear of GBP USD, Naira USD, Euro USD, Euro JPY, and all of those things. So every currency is trading against each other. Which one is gaining strength the more, and like that. And also we have the interest rate. We believe you know about interest rate, and also news event. Okay, take for example, Ukraine is fighting with Russia. Okay, so the economic of both countries is going to start shaking, and that is going to have effect on their exchange. Okay, which simply means those news events will have a direct effect on the foreign exchange market, which is the forex market, and that is going to weaken the currency if the economic is in shambles. Okay, and this is what they call news event. So all of these things move the market. Okay, and we also have supply and demand. Take for example, if the rate of fuel in a country is in scarcity, okay, the demand is going to be high, which simply means this is going to have effect on the market, and market is going to start moving in a kind of direction. Let me show you for example. Okay, you see this chart is going up. Okay, this chart is moving up. It simply means, take for example, if US oil is in high demand, okay, the price is going to skyrocket. And the demand, once the demand of any commodity is, if the demand is high for any commodity, okay, you see the price of it is going to start going up. And if the supply is in excess, the price of it is going to start coming down, because it's not going to have much value. So the value of every commodity, if gold is adding value, the demand is going to be high, which simply means the price is going to start going up. And if gold is losing value, which simply means supply is in essence, the price is going to start coming down. So that is what it simply means by the supply and demand. So all of these things moves the market, and that is what have effect on this candle that is moving up and down in a random form. Okay, so moving on, we have bid, ask, and spread. So back into forex, we have bid, ask, and spread. So bid is the price the buyers are willing to pay for a particular commodity, and the ask is the price the seller wants. Okay, take for example, you want to sell your phone, and somebody is pricing it $95,000, and another the seller that want to buy it is pricing it 100, and is pricing it, let's say, $80,000. So the spread is the difference between the bid and the price. Okay, so if you do the calculation, you're going to be out $15,000 in between those calculations. So these are the profits that these brokers will make from you trading this money. Okay, because why this exit is because the foreign exchange market is large. You don't have the billions and millions of dollars to put in the market. So this broker, because they help you to trade the foreign exchange market as the retail trader, okay, they are going to be making their own profit from the little money you are willing to trade using their broker, because those broker, they are the one that help you to execute the market in this multi-trillion-dollar industry company. Okay, because you don't have the enough money, you don't have the billions of dollars, the millions of dollars to go and invest. Okay, you don't have a bank, you are not an hedge funds, you don't have anything to do with the central bank, so you are trading as a retail trader. The little money you are willing to make, the brokers is helping you to execute that trade in the market, and in return they make a little profit from that money. So that is how we have bid, we have ask, and we have spread. Okay, now moving on, we have leverage and margin. Now, leverage simply means the borrowed capital to trade bigger. Now, you have $100 and you want to make $1,000. Okay, leverage here is simply means you are using 1:10. Okay, to make $1,000 with $100, which simply means the little money you have, the broker, which I just explained, that help you to execute the market in the foreign exchange market, they are willing to allow you to handle times 10 of the capital you have. Okay, which simply means if you deposit $10, you can use the $10 to make $100, which simply means 1:100. And they can also give you the leverage up to 1:unlimited, which simply means with the amount of money you have to trade, you can make unlimited money with it. And you can see some leverage, which simply means 1:100, which simply means you can only make times 100 of that money that you are willing to trade using that broker. So that is what leverage simply means: borrowed capital to trade bigger. And you can see on the screen right now, you can see on this you have balance, you have equity, you have margin, and we have free margin, which simply means the capital required to open a position. And on this chart you are seeing 1, 2, 3, 4 position. Okay, this position simply means I open this position with $3.59, which simply means for me to open this 3 position with the $14 balance I have, I need to spend at least 3.59 cents to be able to open this 4 position. That is what we come about this capital required to open a position. That is what margin is all about. So if I have $2 as my balance, I will not be able to open 4 positions of this particular position because the margin would not be enough for me to open the position. So that is what margin is all about, and I just explained leverage for you. And this one, they say warning, high risk, and all of those things. If you are trading with this account, okay, for example, and you use all, and your margin is showing $14 and your balance is also showing $14, which simply means the leverage is very high, your margin is going to be so high, and it simply means you are risking so high, and any little move against you, you are going to lose that account, which simply means you are going to lose that money. And if the market goes in your favor, you are going to be making a lot of money. So high leverage equals high profit, high leverage equals to high risk if the market move against you. Okay, so now we have pips and lot size, and you can see from the chart here, you see pips is the smallest price move. Okay, so all these things I'm explaining to you, these are basic things you need to understand if you are new into forex. These are the little things you need to know, and these are all the things you need to know once you are coming into forex for the first time. Now pips simply means smallest price move. Okay, so if this candle move from, you can see on the chart here, you are seeing 6.6328.250. if this candle move from 6.328 to 659, you are going to be having 1 pips. Okay, so for every single move the candle move is called pips. Okay, so you can calculate if you calculate from 6320.000 to 6.32.500, so you are going to be minusing 6.32.50 from 6.320. That is what is going to give you the pips from that point to this point, and that is what the movement is all about. That is what pips is all about. Okay, so pips simply means the movement of price. Okay, and lot size simply means the quantity of the amount of the trade you are taking is what is called lot size. Okay, so how big is the lot size is how big is profit, and how big is the lot size equals to how big is the risk. Okay, so now we have a standard lot size. Standard lot size is simply means one lot size. Standard lot size is equals 100,000 units. 100,000 units of one standard lot size is 1. Okay, which simply means for every pip, if this price move from 0.001 to 0.002, you are going to be making $10 for each move. All right, if price move by 1 pips with your one standard lot size, you are going to be making $10 for each move. The same thing for your mini lot size. It simply means 10,000 units of 1 mini lot size, which is 0.1, you're going to be making $1 for each move of the candlestick. Okay, so take for example, I'm using a one standard lot size for this trade. Okay, I'm using a one standard lot size for this trade. If the price move, let me show you a practical example. I'm using a one standard lot size for this volatility 151s. Okay, if price move by 1 pips, okay, I'm going to be making $10 for each move. Okay, you can see here I'm using 0.20 cents. Okay, so if price move by the pips I'm using, by the lot size I'm using, if I do the calculation, that's the money I'm going to be making, my running profit here. So the same thing with the rest of it. So 1000 units of micro lot size, which equals 0.01 lot size. It simply means if price move by 1 pips, I'm going to be making 0.5 cents. Okay, so that is it. 100,000 units lot size equals to 1 lot size, which simply means price move by 1 pips, you are making $10. 10,000 units of mini lot size simply means if price move by 1 pips, you are going to be making $1. Micro 0.5 cents. So that is how price move. And again, we have what they call trading section. Okay, in the forex market example, basically if you are trading the currency pair, which I explained about the euro USD, USD JPY, USD Canadian USD and all of that, you don't just go to the market and start trading. They are what they call trading section for people that trade currency pair and people that trade gold and the rest. Okay, we have the Asian session, which is, it has its own time when you can go to the market and trade. That is when the candle, that is when the market move for that section. Okay, we have the London session, which is one of the most active session where a lot of people trade at that time, and we have the New York session. Okay, and we have the volatile overlap. All those sessions simply mean these are the time that bank open in the US, in the UK, in Asia, and all of the rest. And we have the Sydney session also. So as you go into trading, you are going to be understanding what these sessions really means and when you need to trade. Okay, now moving, we have technical basics and we have technical analysis basis. We have the support and resistance, and we have trend line, we have chart pattern, and we have candlestick pattern. Okay, so for support and resistance, these are basic strategy that people use to catch moves in the market. When I say catch moves in the market, it simply means when they make money from the market. Okay, so I'm going to be explaining this support and resistance quickly for you. Okay, so take for example, we have a trend line support. Minutes please, let me increase this. Okay, we have a trend line support, right? We have this line from here to this point. We have our trend line support. Okay, and also from this point to this point, we have our resistance. It simply means that if a price is bullish, okay, and you are trading with our support and resistance, simply means price doesn't have to break out of this trend line. Okay, so I'll take a position here, I'll buy from this point, and then my take profit level will be somewhere at this point. Okay, and also I will look for my continuation setup. So that's that I'm going to be taking my buy, my buy, my buy. Okay, and take for example, if price is bearish, okay, if price is bearish, I'm going to be looking for my resistance level. Okay, take for example, this is my resistance level here, and my resistance level here, and this is my support level here. All right, so I'm going to be looking out for this resistance level until if price break out of this level, I'm going to be taking my my sell, and if price break out of this support level, I'm going to be taking my buy. Okay, so that is all about support and resistance. And the next one is going to be trend line. Okay, trend lines. Okay, now for trend line, they have a similar relationship. Okay, take for example, if I have my trend line resistance at this point, okay, I'll mark it from this point. Take for example, I mark it from this point to this point. Okay, so the moment price break out of my resistance level, I'm going to be taking my buy. Okay, and I'll put my take profit at somewhere here, and my stop loss will be at somewhere below. Okay, so the point at which the price break out of this trend line resistance, sorry, the moment at which price break out of this point, okay, I'm going to be taking my buy, and then my stop loss will be below this level. Okay, so if you are, this is what they call the short tools, and this is what they call the long tool. So for long tool, when you want to buy, this is what you use. This red angle is the money you are willing to lose. So if price cross this level, it simply means you have lost that trade. And if price goes in this green direction, if you are buying, simply means you have won that trade. So this is what trend line is all about when you want to buy. And let me give you another example when you want to sell. I'll give you another example when you want to sell. Okay, let's take this for example. Okay, this is my trend line support, and make sure the higher low that this line is going to touch must be up to 3. That is how you are going to confirm that you are on the right path. Okay, let's make sure the trend line, the higher low, that this line is going to touch must be up to 3. So this is the first one, this is the second one, and this is the third one. Okay, so you mark it like this, and the moment price keep tapping on it, the moment price break out of this line, you are going to take your sell. Okay, and now you set your entry at this point, and then your take profit level will be at this point, at the point that you first mark your trend line support. So this is how you use the trend line to learn. There are more to all of this, but for the purpose of this video, I'm going to be sharing the basic way for you. And finally, I'm also going to be sharing with you my strategy, the strategy I trade to make money from the foreign market. Okay, now this is the trend line support. All right, this is how the trend line support works. And the chart pattern is the strategy I trade. There are different kind of chart pattern, but I'm going to be showing you the most important chart pattern you need to learn as a forex trader, as a beginner trader, for you to make money from the forex market. And we also have candlestick pattern. What is this candlestick pattern? These are confirmation candle that you use to take a trade. Take for example, as I want to take my entry at this point, I will look at my confirmation. Okay, if the confirmation is telling me to sell, okay, it simply means it's valid for me to sell. I'm going to take the trade at that point. But if the confirmation is telling me I cannot sell, even though the price break out of this place, I am not going to sell. So that is what the confirmation candlestick is all about. These are pattern that appears in the market. Okay, and also if you go through my videos, there are places I explain about candlestick confirmation entries. You are going to understand what confirmation candle is all about and how you can effectively use them. Okay, now for this video, for the next one here, we have my strategy for trading. Okay, the advanced market structure. Now this is the most important part of these lessons. Okay, and for the purpose of this video, I'm going to tell you how you can understand this advanced market structure. I've already make a video in my playlist where The playlist title is Advanced Market Structure. This is the basic strategy I treat, and I promise you that if you are able to study that part from A to Z, you are going to be understanding everything about forex market and how you can make money from the market in the next 2 to 3 months as a beginner, as a newbie that you are. Okay, and this is what you really need. So go to my playlist right now after you are done watching this video, okay, because these are just the tip of the iceberg. Everything I'm showing you are tip of the iceberg. So go to my playlist video. You're going to see market structure, okay, where I understand this market chart pattern, POI, liquidity, and also my, excuse me, explain POI, liquidity, confirmation entry, supply and demand, and all of that as part of the advanced market structure. This is what you need. This is the strategy you are going to be trading. And if you're having any issue, you can also message me directly on Telegram. I'm going to be showing you step by step. So watch that video step by step, and you're going to be understanding what the advanced market structure is. But quickly, I'm going to be showing you how the pattern look like and how I make money with this same pattern. So let's move to that point right now. Okay, so everything I'm going to be showing you here is live and direct. Okay, so for the advanced market structure, the first thing we have sweep of liquidity. Okay, so as a newbie, if you're watching this video, someone that has been trading forex for a while and you see you're not making money from the forex market, you really need to go and watch that advanced market structure, that playlist I created especially for you. So you need to watch it. So we have the sweep of liquidity, we have the protected high, and we have the structural liquidity, and this is our POI. Okay, and this is our POI. Our POI is somewhere here, and also we have what they call our demand level, our supply level, which is this last green candle. Okay, this is this last green candle, and wait for price to come into this zone and also sell off. Give us our confirmation. Confirmation is already here. Give us our confirmation and a sell off. Okay, so that is what I'm telling you, that if you are just watching this video for the first time, do well to watch down my video. I'm going to be dropping the link somewhere here so that you can easily click on it and watch the whole playlist. This is what is going to help you to become a profitable trader, and this is what this is the end to your struggle in trading forex. All right, and also you see, once you see this pattern like this, okay, our structural liquidity, our sweep of liquidity, protected high, structural liquidity, our first break, our second break, first break of structure, second break of structure, price coming to this zone, give us our confirmation and sell off. Okay, so this is the thing you do when you want to sell, and this is the same approach you use whenever you want to buy. All right, so this is what is going to give you a high win rate. All right, you don't need more strategy than this. Click on that playlist, watch those videos. There are about 7 to 8 videos of them. Watch those videos and you are going to start applying it in your trading, and you still start seeing results. But as a newbie, if you want to enroll for my one-on-one mentorship, you can also message me directly on Telegram. The link to my Telegram is on the bio, and I'm going to message you and hold you by the hands and show you everything that you need. All right, now fundamental basic analysis. These are what some people, there's something called technical analysis and fundamental analysis. Now fundamental analysis is what people use to trade the foreign market. Some people don't use technical analysis, but me, I use technical analysis. I've never used fundamental analysis, and that is because I don't trade currency pair. I trade mostly synthetic indices, and people that trade currency, gold and crypto, they use fundamental analysis. And what is fundamental analysis? These are news, economic news impact, and this news have effect on the market, and because of this impact on the market, they know what is going to happen next to the economic of a particular country, and thereby altering the currency of that country and what is going to happen in the market. Like I explained earlier about NFP, which is has to do with increase in job employment or decrease in job employment, and interest rate decision, and also the use of economic calendar to know what is happening around the world. Okay, so these are all fundamental analysis where people look at for things that is going to happen, and then they use that leverage to make money from the forex market. And also we have what they call the market sentiment. These are all psychology. It's psychology of people, how the market move, why people react, and so on and so forth. So we have what they call crowd psychology. Crowd psychology also have effect on the market. Okay, take for example, this chart is moving in a random form. Okay, some people are buying the market, some people are selling the market, same way people are making money, same way people are losing money. So all those are called crowd psychology. And also we have what they call greed and fear. Okay, these are all psychological aspects of forex trading. Greed simply means when you want to make more money when you have already gotten to your target, and fear simply means you are scared of holding trade, you are scared of making money when you are running in losses or when you are running in profit. Okay, so all these are all psychological factor. And also avoid following the crowd blindly. Okay, so always learn to do your own research. That is what they mean by avoid following the crowd blindly. Always learn to do your own research and trust your instincts, trust the analysis you have done, and this is what is going to help you. All right, now moving on, we have trading tools. Okay, you don't just know forex and then you don't know the tools you are going to be using. Number one, you have a trading view, which is used for charting. That is where you analyze your trade. Take for example, I am showing you the chart here. You could see where they write chart by trading view here. So you can have trading view on your laptop, trading view on your smartphone, trading view on your iPad or your tablet. And the MetaTrader 4 or 5 is what you need. That is the app. As a forex trader, you must use that app as a rated trader. That is where you execute your trade. Okay, that is where you execute your trade. Take for example, this trade was executed on the MT5. Okay, this is an MT5. So you need to download the app, and that is where you need to execute trade after you analyze on the trading view. Okay, and also we have the broker. Number one broker I use is Derive. Derive is the broker I use. You can check the link on the description of this video to sign up your account on Derive and register, fund your account, and learn how to do the analysis and take your trade with my strategies I've already explained for you in my playlist. So you have to go and watch that video so you know what you are doing. And if you're having any question, you can also ask me. We have Forex Factory of my FS book. This is where you track. That is just like the economic calendar where you do your fundamental analysis, and my FS book is where you journal your trade, you keep record of every trade that you are taking. And also position size calculator, you know the lot size you need to use to take a trade so that you don't blow your account. So all these are app trading tools that you need as a forex trader for you to be able to do well in forex. And simple trading strategy is by following the trend. You buy when the trend is going up, you sell when the trend is coming down, combined with candlestick confirmation. I made a video about confirmation entries in my previous video, so check my playlist. I'm going to also see that candlestick confirmation. Okay, and also lastly, there's something called risk management, which is also the best part of forex trading. Okay, because when you don't manage your risk effectively and you lose money, you are not going to be able to keep the money you make because of risk management. So risk management simply means using a percentage of money to trade. Take for example, you have $100 account and you divide that money into 5. You manage a particular risk per trade. Take for example, you are trading 10% of that account, which simply means every trade you take, you are risking $10. And if you are aiming for 1 to 2 risk to reward, it simply means you are risking $10 to make $20. If you are aiming for 1 to 3 risk to reward, it simply means you are risking $10 to make $30. You don't have to risk the whole of your capital for you to make some particular amount, because there is losses and there is wins. So you need to avoid losses. Okay, you can't avoid losses. Simply means that is why you need to always apply risk management. Okay, risk some percentage of money and aim for a particular risk to reward ratio. Okay, and also emotional discipline. Okay, this has to do with the psychological aspect of trading. You stick to your plan. All right, do not chase losses and avoid over trading. The less you trade, the better you are going to be performing. The more trade you take, the more losses you are going to incur, and that is not what you want for yourself. And also, common mistake you need to avoid as a trader: you have to trade with a plan. You cannot start trading without a plan. Once you don't plan your trade before taking, you're just going to be trading blindly, and also using high leverage recklessly. You don't need to over leverage. Like I explained leverage earlier, the higher the leverage, the higher the risk, and also the higher the profit. But you don't want to over leverage and then start having some kind of emotional attachment with the money you're risking. And avoid copying others blindly. Do your own study and make sure whatever you learn, you apply it in the market. Execute based on your analysis. And you need to always journal your trade. Take record of every trade you are taking, and also review why you are taking some trade, why you are losing on trade. All right. And lastly, how you can start right in 2025. Choose a trusted broker. The broker I use, there are other good broker, but the only broker I use at the moment is Derive. You can check the link on the description of this video where I drop the link to my Derive link. You can sign up your account here and also start a demo account. Okay, demo account will help you to practice and then get some kind of perfection before you fund your live account. Then you can trade with real money. And also journal every trade. Take record of every trade. And remember, if you don't learn, you cannot earn. So always try to learn first, and then the money will follow, so that you don't lose money anyhow to the market. And my final words for you is be patient and be consistent. Whatever you are learning, be consistent. Consistent in implementing, consistent in execution, consistent in everything you are doing about Forex. Or the truth is going to actually change your life, and the time you put into it is going to be worth it. And education first before money follows. And if you watch to the end of this video, don't forget to subscribe, join my community for more content like this, and I'm going to be dropping more and more better videos for you to help you grow in your Forex trading journey. So we've come to the end of this class, and I will see you on my next video. Peace out.